home insurance premiums in Texas have doubled the national average. December 2025. Progressive Insurance withdrew from Texas in September 2024. Four major insurance companies fled the state in 2024, leaving 11,000 homeowners in the lurch. Houston's average premium of $6,610 ranks first among America's 20 highest cities. In Clear Lake, John Cobarruvias paid a $750 premium in 2000. Today, he pays $6,000, a 700% increase. His deductible rose from $500 to $9,000. The Texas Windstorm Insurance Association started 2024 with a $46 million surplus. It entered 2025 with a $413.5 million deficit. It has only $8 million in reserves left for hurricane season. And Governor Greg Abbott? He didn't say a word about the insurance crisis in his 2025 State of the State address. Why can't Texas homeowners find insurance? Which companies left and why? What does Abbott's silence mean? Texas homeowners now pay an average of $4,585 in premiums per year. That's 117% above the national average, a 54% increase since 2019. Premiums rose 21% in 2023 and 19% in 2024, the largest consecutive increases in the last decade. Houston is America's most expensive city. The average premium is $6,610. Fort Worth is second at $5,355. Dallas homeowners pay between $4,945 and $6,216. Austin and San Antonio are relatively inexpensive at around $2,100 and $2,400, but still above the national average. Statewide, Texas ranks as the fourth most expensive in the nation. Only Nebraska $5,640, Oklahoma $5,317, and Kansas $4,896 are higher. But these are averages. The real stories are much harsher. John Cobarruvias lives in Clear Lake and is a retired analyst from NASA. His house is paid off with no mortgage debt. In 2000, he paid an annual premium of $750 with a deductible of $500. Today, he pays a premium of $6,000 and the deductible has risen to $9,000. That's a 700% increase. He told ABC 13 Houston, "This increase is unsustainable. At some point, it would be better to put this money into a savings account." Cobarruvias is not alone. Mary Ann McGregor, 74, has lived in the same house in Clear Lake since 1986. In 2020, she paid $3,300 in premiums. Today, she pays $8,000 to a small startup company. The wind and hail deductible is $28,400, double what she paid to replace a roof. "Maybe we should move," she says, "before things get worse, before we can't sell the house. Because no one will buy it at these insurance prices." Ray Spreen, a 74-year-old living in Bel Air, has never filed a damage claim. Yet his premiums increased by 22% in 2023, 39% in 2024, and 78% in 2025. He hasn't even experienced a single storm. Every homeowner in the system is being penalized. This isn't just a problem affecting retirees. In Round Rock, Deanne Fraser filed a claim for nearly $500,000 in storm damage in 2022. She was ready to sell her home, but days before closing, the insurance company said it would not renew her policy. She frantically searched for offers for 2 weeks, finally finding one at twice her previous premium. "Should I have gone out and told the tornado, 'Please skip my house'?" she asked. The market is bleeding. Texas Insurance Commissioner Cassie Brown testified before the legislature in September 2024 for companies left the state, affecting 11,000 homeowners. But the real damage goes far beyond these numbers. Progressive Insurance temporarily stopped writing new homeowners policies in Texas in September 2024. Company CEO Tricia Griffith wrote in a letter to shareholders, "Mitigating the impact of weather-related volatility is strategically important." Progressive disclosed that 40% of its recent storm losses came from Texas alone. The company is among the top 10 home insurance companies in Texas. Foremost Insurance, a subsidiary of Farmers Insurance, began suspending policy renewals in coastal areas in July 2024, 2 weeks before Hurricane Beryl hit Texas. In a customer letter published in the Houston Chronicle, the company wrote, "We recently reviewed our risks and exposure related to natural and catastrophic losses and have decided to discontinue offering this insurance program in your region." Kemper decided to exit the nationally preferred home insurance market. 2 Texas subsidiaries were approved to leave the state in 2026. Robert Dempsey of Clear Lake received a letter from Kemper stating they would not renew his policy. He searched for quotes for 2 weeks, but no company was writing policies in his area. The best quote was $9,700, more than double his previous $4,377 premium. Some companies quoted $15,000. Lemonade has stopped selling new homeowners and apartment insurance policies in several counties that include parts of Dallas-Fort Worth. Insurance agent Frank Barbella says all his clients are feeling the pressure. He gave an example. A client we insured for around $2,000 received a renewal quote of $10,000 from the same company, with no claims filed. All his clients are seeing at least a 20% increase per year. As companies flee, homeowners are turning to the last resort, the Texas Fair Plan. The Fair Plan is an insurance pool established by the state in 1995 that steps in when no one else will provide coverage. The numbers show an explosion: 72,626 policies in December 2023, 113,860 policies in December 2024, 127,957 policies in June 2025. Estimates show 135,000 policies by the end of the year. Harris County alone accounts for 51.7% of all Fair Plan policies. Fair Plan policies are more expensive and provide less coverage, but it's better than nothing. Or is it? The Texas Windstorm Insurance Association is facing its own financial catastrophe. Since 1971, TWIA has provided storm damage insurance for homes along the Texas Gulf Coast that cannot find coverage from traditional insurers. The numbers are alarming. TWIA started 2025 with a $413.5 million deficit, a dramatic reversal from just a year ago when it had a $46 million surplus. Hurricane Beryl made landfall on July 8, 2024. The storm caused $515 million in losses. TWIA had to draw $462.7 million from the Catastrophe Reserve Trust Fund. What's left? Only $10 million in the Catastrophe Reserve Fund, down from $451 million before Beryl. For the 2025 hurricane season, TWIA currently covers 280,376 policies, with $121.2 billion at risk. Its market share in coastal areas has risen to 53%, up from 40% in 2022. This means private insurers are fleeing these areas. TWIA's rates are 38% inadequate for residential coverage. Yet Commissioner Brown rejected the proposed 10% rate increase in October 2024. Of 492 public comments, 489 opposed the increase. Brown called the increase unfair and unjust. TWIA now spends about half of its premium income, $485 million in 2025, just on buying reinsurance. So premiums are insufficient, reserves are depleted, and hurricane season is coming. At the August 2024 TWIA board meeting, after the vote rejecting the rate increase, board member Ron Valenta said, "I have my prayers in my heart that we will be lucky this year." But that's hope over logic. The reasons for the crisis are clear. Texas has become America's weather disaster hub. The state recorded $47.2 billion in direct insured losses in 2024, up from $45.4 billion in 2023. Since 1980, Texas has experienced $190 billion in disasters, more than all other states combined, with a total cost exceeding $402 billion. Hurricane Beryl struck the densely populated Houston metro area on July 8, 2024. It brought the strongest winds observed in recent years. Insured losses of $2.50 to $4.50 billion. 2.5 million homes lost power. Some areas were in the dark for days. But Beryl was just one event. Texas experienced 878 major hail events in 2024, more than any other state. Hail and wind account for 40% of all homeowners' claims. In June 2023, storms in the Dallas-Fort Worth area alone caused $7 to $10 billion in insured losses. In February 2024, the Smokehouse Creek fire became the largest wildfire in Texas history. It started with a spark from a fallen power line. 1.05 million acres burned. Estimated economic loss, $1 billion. This is not just a one-off year. In 2023, the state saw $28 billion in weather-related claims. Progressive said 40% of recent storm losses came from Texas. The pattern is breaking the mold. Nationally, billion-dollar disasters that once occurred every 82 days now happen on average every 12 days. Climate scientists note that intense, rainy thunderstorms are becoming more frequent and prolonged, and conditions that produce large hail are becoming more widespread. Governor Greg Abbott has been conspicuously silent on the insurance emergency. His February 2025 State of the State address lasted 30 minutes. He did not mention homeowners insurance once. He listed 7 priorities: property taxes, school choice, cybersecurity, but not the insurance crisis affecting millions of Texans. His December 2025 property tax cut proposals also blatantly ignore insurance costs. The Texas Tribune wrote, Abbott's platform doesn't address other aspects of housing affordability, like the rising cost of homeowners insurance. The relief homeowners see on the property tax side is being eaten up by rising homeowners insurance costs. U.S. Census Bureau data confirms this. The typical Texas homeowner paid less in property taxes in 2024 than before the COVID-19 pandemic. But total housing costs skyrocketed because of insurance. Abbott launched his re-election campaign in November 2025. His promises: lower property taxes, cap home value increases from 10% to 3%, and limit local government spending. Tax policy experts call the plan California's Prop 13 mistake, saying it would benefit the wealthy and drive up prices. But Abbott isn't talking about the insurance crisis. Lieutenant Governor Dan Patrick included insurance costs in his interim work directives, but did not make any insurance bills among his top 40 priorities for the 2025 session. Commissioner Brown's public advice to struggling homeowners: shop around. As if the problem is a lack of price comparison. The first Texas legislature did make many headlines. Over 600 property and casualty insurance bills were introduced. Meaningful reforms failed. HB 1576 would have created storm hardening grants of up to $10,000 per home, inspired by Alabama's successful program that awarded over 50,000 grants. It passed the House of Representatives 120-21 but died in the Senate, never even coming to a vote. SB 1643 would have required pre-approval for rate increases above 10%. It passed the Senate but failed in the House of Representatives amid intense opposition from the insurance industry. The industry lobby, led by APCIA, USAA, and the Insurance Council of Texas, argued that the current file and use system prevented the company migration seen in California and Florida. What passed? Incremental. SB 213 bans mandatory auto home bundling. HB 2067 requires written reasons for cancellations, and HB 3689 restructures TWIA funding. None addressed the fundamental rate crisis. Consumer advocate Cobarruvias assessed the session bluntly. It's clear the legislature won't tackle the tough issues here. Industry power is overwhelming. The Insurance Council of Texas Insuring Texas PAC spent over $1.9 million in the 2024 election cycle. USAA and its affiliates spent $845,000. State Farm and Farmers PACs contributed over $100,000. Result: the legislature will wait until 2027 for structural reform. By then, how many Texans will be unable to pay their premiums? How many will be uninsured? How many more insurance companies will flee? The human cost emerges from individual stories. The numbers are heavy, but the fate of real people is devastating. When John Cobarruvias renews his policy in March 2025, he is considering reducing his coverage. $6,000 plus a $9,000 deductible is too much for a paid-off home. He never filed a claim, paid premiums for 25 years, retired from NASA, and now insurance companies are punishing him because his neighbors had storms. Robert Dempsey learned the truth while shopping for quotes in Clear Lake. No major company in his area is writing new policies. The best quote was $9,700. Some companies wanted $15,000. He finally turned to the Texas Fair Plan, but to get in there, he had to get enough rejection letters. A lot of smart agents know how to get enough rejections, said State Public Insurance Advisor David Bolduc. You can go in there and pay lower rates. Kat and Giles Roberts bought a 3,000 square foot home in Clear Lake. Until last year, they paid $3,000 to $4,000 in annual premiums. After a spring storm, they had to replace their roof. They paid their $12,450 deductible out of pocket. Kemper covered the rest. Then Kemper announced it would raise their premiums to about $12,000. Insurance brokers shopped around. They couldn't find anything cheaper than $9,000. Kat Roberts told Texas Monthly, "Many of our neighbors use the Fair Plan, but we have to be honest, we can't get in there. We're not being denied, we're just getting astronomical quotes. But because we chose to be honest, we're paying $12,000 a year. We can't afford it. It's out of control." Mary Ann McGregor has lived in her Clear Lake home since 1986. She used to be insured by major insurers. Now she's with a small startup company she's never heard of. "I can't even pronounce the company name," she says. The deductible is $28,400. If a storm came and I had to rebuild my roof, I don't know if it would cost more than $28,400. But that's my deductible. So why have insurance? The crisis now threatens the broader Texas economy. According to a Kinder Institute study, 2/3 of Harris County residents struggle to afford housing costs, with 70% citing insurance as the main reason. Combined with Texas high property taxes, averaging 1.63%, Houston homeowners face over $16,800 in non-mortgage costs annually on a $600,000 home. Mortgage approvals are becoming harder because lenders include insurance in debt-to-income calculations. Higher insurance means smaller loan approvals. Already 9.5% of Texas homeowners, more than 1.1 million households, don't carry insurance, the 14th highest rate nationally. 1 in 6 dropped it last year. Cobarruvias and Dempsey are among those considering joining them. Real estate agent Eric Juarez works with Great Western Realty in Fort Worth and is vice president of the Dallas chapter of the National Association of Hispanic Real Estate Professionals. Premiums are nearly doubling, he says. A lot of people have to shop for insurance, and people moving into new homes are getting high premiums or struggling to find a good company. John Burns Research and Consulting, a national analyst, surveyed builders about buyer concerns regarding insurance access and costs. Builders reported that the majority of new home buyers in Texas, 84%, were not concerned about insurance, but 16% were somewhat concerned. Florida and California had a much larger share of buyers worried about obtaining or affording insurance, some very worried. But Texas was the next largest concentration of insurance fears. The Texas Comptroller warned that housing affordability plays an important role in Texas economic growth and expressed concern about the coming decades. Texas is facing an insurance catastrophe driven by climate change, severe weather, and insurer pullbacks. Yet political leadership has largely looked the other way. The numbers are staggering. $47 billion in losses in 2024. 127,957 families pushed into last resort insurance. Only $10 million in wind funds to face hurricane season. Average Houston premiums exceed $6,600. Governor Abbott's silence on the issue. The legislature's failure to pass storm hardening grants or rate oversight. Commissioner Brown's shop around advice. All of this indicates that structural reform won't come until at least 2027. Meanwhile, Texans like John Cobarruvias face a choice that shouldn't exist in America's second-largest state. Pay $6,000 a year with a $9,000 deductible or gamble with no coverage at all. While Abbott remains silent, Texas homeowners are seeking solutions on their own.